In his note this morning, my next guest wrote that sadly, a rate cut in September appears fully priced in. But the probability of a 50 basis point cut, which appeared all but certain only 10 days ago, has now fallen to less than 50%. I'm going to bring in Kingsview Wealth Management CIO, also Fox Business contributor Scott Martin. Scott, sadly, the party, everyone's rocking. You seem worried. What's going on?
Mom and Dad need to come home, Charles, and you got to let them in the front door and not lock them out so you can party a little bit more. And that's the thing I liked what you talked about with Jim Bianco. Who won this battle? Who won this fight, Charles? The market did, not the Fed. We didn't get to the targets that the Fed wanted when they were doing the hiking of the interest rates the last couple of years, when they were doing the commentaries after they stopped. And certainly I agree with you, too. The economy has weakened to some degree, but I think it's stronger than what people think. It's stronger than what the data says. And the Fed probably knows that, but they're bowing to the markets for some reason here. And I think it sets off a dangerous precedent going forward because, as you said with Jim, what do you do after that? You do another cut in November, you do another few in 2025, and then you may have to hike again because inflation comes back and the economy takes off again.
Yeah, and listen, even the best of them, right? Volcker was a little bit too early at one point, but after that, he learned his lesson, and he really gave it to the economy till it was clear that the coast was clear. But when it comes to markets, right, you're a professional investor, and this market does like the news. And so let's say highs are put in. We make a new high in the S&P 500. It seems to me that would draw more money, and it would certainly feed on itself for a certain period of time, wouldn't it?
It will, but is that the last kind of dollar in, Charles? I mean, because now everybody knows what the Fed's going to do, and that was what I think this rally did in anticipation of what the Fed was going to do, and they pretty much announced it today and pulled off the robe and said, here we go. And so now you have the ability of the market to say, okay, now we're going to look at fundamentals. Now we're going to maybe look at geopolitical concerns. Maybe we're going to look at prices of raw materials, by the way, which are going to go up and reflect of the dollar going down. So there's a lot of other things now at play that may change the narrative for that individual investor that says, hey, now that the Fed's cutting, now we need the party again. Now we had the party, and let's say, what's the next party, and what are we doing tomorrow night to hang out?
So with that in mind, it seems like you're taking not a cautious view, but you really like financials, from what I understand. CMA, American Express, J.P. Morgan, Comerica, and these names. These are really big names, although I will say last week American Express got a big downgrade. And I think it was a major firm that downgraded them, in part because they were concerned about the credit quality of Americans, consumers themselves. How concerned are you, though, that a weakening consumer might hurt these financials?
It's concerning to some degree, Charles, but there's a lot of their consumers that are doing very well if you slice up their book of business, so I'm not too concerned about that. And then the banks, obviously, with the interest rate curve now getting steeper and the fact that rates are coming down on the short end, that's good for the banks. And the banks have been poo-pooed for this whole year about this commercial real estate crisis coming forward. Like you said, the lending practices of these banks and the quality of the borrowers, that's not coming through. And so the Fed now cutting rates to help out, say, that situation and encourage risk-taking, that's going to help the banks big time. And so I like them here. Comerica, by the way, one that we've talked about on the show about a year plus now, 52-week high just about 15 minutes ago.
Yeah, no, I recognize that some of these names you've liked for a long time now. So before I let you go, are you taking any action in terms of mitigating risk here, or are you just saying, hey, let's just not be too excited?
Yeah, not too excited. I think you wait for some of those down days to change some things up, Charles, which means you take off maybe some good days as far as big profits. And then on down days, I think you've got to come in and take the stuff that's really getting plastered, because I think that's how this market's going to work out. You're going to have a lot of people chasing these highs and selling these lows. And I think if you want to make money as an individual investor, you have to do the exact opposite of that and do the reverse, let's say.
You know, I got to tell you, almost every single day, if you look at the top 10 gainers in the market, that's exactly what's happening. Half of them are momentum plays, and the other half are a lot of bottom fishing. So, I think you're absolutely right there. My man, Scott, thank you very much. Have a good weekend.
See you, man.
All right.